folks, Dan Frio here, the Mortgage Update, and today is October 10th, 2019, and you're seeing here on the cover sheet that mortgage-backed securities got pounded, and you're going to say, well, Dan, you said the other day that we should, we should trade in this range, and you said maybe the rates might even ease a little bit, but we hit this Fibonacci level. And we hit the ceiling right here, where the bottom's here, the ceiling's here, and you said that we're going to stay in this range. So stay tuned, because I'm going to tell you what happened. All right. So, but just to tell you a little bit about myself, my name is Dan Frio, the Mortgage Update. I post this every night, or try to do it the best I can every night. I am a mortgage advisor in the Chicagoland area. I can help people basically through almost all the whole country. If you need any mortgage-related needs, feel free to call me, give me an email, comment down below. I post these every night. If there's a specific topic you want me to cover, or if you're in need of a specific situation, you're just like you don't know how to get a hold of me, or you're reluctant to call, just shoot me a comment down below, or shoot me an email. I'd love to help if I can. The best way to get a hold of me is you can call me toll free at 844-775-LOAN, and that breaks down as 5626, or shoot me an email at dfrio, F-R-I-O, at parksidelending.com. And please, if you would, give me a thumbs up if you like these videos. Don't forget to subscribe down below. Hit that bell so every day when I do post, you can get alerts. So I do want to apologize for all those mortgage people out there. I didn't post an alert yesterday or today. I was scrambling. I have about just close to $10 million in loans for clients of mine that I was scrambling around, because I sit by my computer all day working. I don't pound the streets. I don't go on long, elaborate lunches. I sit there basically 10 to 12 hours a day and work. And I locked in almost everybody I have. So let's get to it. So what happened? Here's what happened. The Dow rose 151 points today. Why? Trump finally cut a deal with China. So I always say, watch, if you follow the technicals, and that's what we do on this channel, is I'll give you the predictions of what possibly, what the markets are trending at, or where we are. However, tweets, deals, bombs, tariffs, everything like that can play havoc on the market, as we saw today. So basically, Trump cut a deal with China. I don't know the specific details behind that yet, because it was just announced after the bell. And so what happens is, you hear me always say, why mortgage-backed securities? What's the difference between bonds and stocks? Well, what happens is, when the economy's running good and everything is peachy, people take their extra money, and invest in stocks. Okay. However, when things are not peachy, unrest in the Middle East, trade wars or debates, impeachment talks, all this stuff causes uncertainty in the markets. The markets don't like uncertainty. So what people normally do, they're like, I'm not going to buy stocks because it's so volatile. One day it's down 500, next day it's up 300 or whatever. I want to, air quotes, flee to quality or safety. When they flee to safety, basically people move their money from stocks and into bonds, and that's a safe haven. You put your money in somewhere, you don't put it in your mattress, and that's where people put their monies. So basically, there was talks all day long about a deal. You're probably going to see the market open up even bigger tomorrow, because this took place after hours. There's some notice in here that there's some talks and everything else, but this was kind of out of the blue, because yesterday they came back and said, they don't think there's a deal here. So let's get to the technicals, and let's see what did happen. So if you're following the channel, or if you're new to the channel, what we follow here are what's called mortgage-backed securities, MBSs. This is the instrument, or the bond, that actually creates, or it's the instrument that makes mortgage rates. They're tied to exactly this, because this is a batch of bonds, or a batch of mortgages that create a package that sell as bonds. So it's a basket. Just think of a big basket. You want to buy a bushel of apples, and that's what this is. This is a bushel of mortgage-backed security notes. So people go in and invest in those. So the yields right now are 1.38. But mainly what we follow here is we follow this. This is the price, and I'll stress that, the price of this mortgage-backed security bond. Okay? As prices go down, rates go up. Okay? As this number goes down, interest rates go up. As this number goes up, the price of the bonds, the rates go down. It's an inverse relationship. So what happened today is people were taking their money out of bonds, moving them into the stock market. Well, when you're taking money out, there's less demand, so that's pushing down the prices to bring it to equilibrium. When you bring down the price, the yield or the interest rate goes up. Okay, so let's get to the technicals. Right now, we hit this mark right here the other day, and I said, just stay tuned because we hit the ceiling. I don't really see us doing too much in the next few days, maybe going right to here. Okay, that's what should normally happen in a normal market. However, the China play and the Middle East play and the impeachment play, all that can play havoc on these technicals. Okay, so what happens is you're going through. Talks with China start to get a little bit okay. Oh boy, that's creating good news for the markets, the stock markets, because you might have heard that comment. Trump said, well, if I create a deal with China, stock market's going to go up 10,000. Well, that's a little sarcasm, and I don't think it's going to go up that much. But again, how does the stock market go up 10,000? Well, money's got to come from somewhere. So it pulls out of the bond markets, such as mortgage-backed securities. Pulling out causes the prices to go down, rates to go up. So that's what you're seeing. If there's a deal with China, stock market's going to go up. This is going to go down. And it's going to, as it goes down, it's going to jack up rates. So one of the things we follow are the Fibonacci levels. This is a floor and a ceiling. So usually we're going to trade in this range, as you see we normally do. And we hit this ceiling a few times, here. And then all of a sudden we got the good news, some trade news and other things, and we started to drop. These lines here, this one here is a 25-day moving average. You can see that it's kind of volatile. A 50-day moving average is a little less volatile, but we sunk below the 50-day, and then we sunk behind the 25-day. That's causing me to be cautious, and that's why when I got some news here the other day, yesterday, I saw it come off of this level. It bumped the Fibonacci peaks or the ceilings, and then we opened the next day here. I started locking everybody. So my clients, on average, probably got an interest rate that's at least 0.25 or 0.25% better than those who were taking applications and just kind of, meandering, went out to it, especially today. We probably had at least a 0.25% increase today. If you didn't watch this market and you'd put in an application and that loan officer kind of dilly-dallied with it, you might have, instead of getting a 3.75% rate, might have got a 4% rate. That's what I do different. So people, when they call me, Dan, what do you do different? This is what I do. My job is a mortgage advisor. I'm not a you call me up, a loan officer that just takes down your information, pulls your credit, does this, does that, and just kind of, checks you out on it, like you're at Walmart buying groceries, just checking you out. I advise you on what to do, and this is what I do. If I could save my clients a 0.25% in interest rate, just think how much money you're going to save over the life loan. I had 3 or 4 deals today, and each one was about $300,000. 0.25% in the rate could be $100. What's $100 over a 30-year term? $36,000. $36,000 this move might cost you if your mortgage advisor doesn't do what I do. So, but I apologize. A lot of realtors and mortgage people follow me, and I try to, let them know, give them an update saying, hey guys, lock. But I was just too busy today, so I apologize about that. But don't rely on me. This is what you should do as your job. Take pride in it. And if you're a homeowner or looking to refinance or buy, that's why I suggest, give me a call. This is what I do. So take it for that. So that's it for today. Tomorrow there's really no economic news. I will give you a little bit of news that did come out, which is good. If all the technicals were in place, we wouldn't have seen this drop. This drop only took place basically because of the China tariff war. It looks like they're cutting a deal. But the good news is inflation is in check. It's actually lower than expected and much lower than what the Fed target is. And that's why the Fed, they watch this thing, and if they want to, pump some liquidity into the markets, they lower rates. I said 2 days ago, I don't think the Fed's going to do anything the rest of the year. That's my prediction. I'm standing steady with that. There's two or three different inflation indexes. The one that the Fed watches is the PCE. It's running at about 1.4% increase year over year. The Fed's target is 2%, so we're way below that. One thing, if you're still sitting on the fence and you're thinking, do I want to buy or do I just want to continue to rent? First of all, if you're renting, your reluctancy is, I don't really want a mortgage. Well, your rent is a mortgage, but that mortgage, the payment you pay is paying your landlord's mortgage, not your own. Rents year over year are up 3.8% from last year. So just take that into consideration. Your rent's probably, if you haven't renewed it yet, probably going to go up 4 or 5% if and when you renew. And like I said, the biggest thing right now is just watch the China deal, the tariffs, the agreements, what's going on with that. If it goes through, you can see more of a rate increase because you're going to see people moving out of bonds into the stock market. If you see something, it said in here that they did make a deal, but I don't always trust this. So if it comes out tomorrow that they thought they had a deal, but then Trump threw them out of the Oval Office, you could see the stock market plummet and interest rates come back all the way where they were 2-3 days ago. I don't think that's going to happen. I think they're going to find some middle ground on some of these tariffs. And is it all going to be settled? No, but I think they're going to find some middle ground. So that's what I'm saying right now. If you didn't lock, I would hold off. So cautiously float. Monitor this on a minute-by-minute basis. And if you see this, it's probably going to open, maybe a little bit flat, or it's going to depend on after hours what's going on with this tariff thing. So we'll see tomorrow. But I will post tomorrow because tomorrow should be somewhat of a slowish day in regards to all this activity. But we'll see. It's all tied to the tariffs. So sorry this one was a little bit long, but I just wanted to explain to you, what's happening and kind of go into detail. This is a perfect example when I say you guys have to watch this thing. This is a huge move. Again, you probably got a 0.25% increase in rates just today alone. So that's it for now. Again, please, if you like my video, please give me a thumbs up. Don't forget to subscribe. If I can be of any help, give me a call at 844-775-LOAN or shoot me an email at dfrio, Frio, at parksidelending.com. God bless. Have a great night, guys.